Borrow Smart, brought to you by rsrhomeselect.com, rsrhomeselect.com. The transition loan from Geneva Financial. One of my favorite products. Why is it a favorite product? When I consult with folks, a lot of times I hear one of the biggest concerns people have, especially in this market, they really are concerned about trying to sell their house because for one reason or another, they don't want to be homeless. What do I mean by homeless? Well, they're not going to list their house because they're worried, are they going to find something that they can afford, something that they like? And even more than finding something that affords something they like, are they going to find something that they can win the offer on? So we consulted with a client a couple of weeks ago. They have a house and they are looking at another one in the same neighborhood, just a different model, different configuration, a little bit bigger, growing family. And the concern is, well, what do we do if we sell the house that they're in? Well, if they sell the house they're in, it turns out that they made a very aggressive offer on the property that they liked, but they did not win the offer. Somebody else did. What would have happened if they had had their house on the market and had it sold? Now, yes, I know you can sell with a contingency or you can put an offer in on a contingency, but when you're trying to win a bid on a new place and put there that you're contingent on the sale of something else, I don't know that the agents right now in this market in many parts of the country are going to be that excited about it. So what is the option? What is the alternative? Well, it's something called a transition loan. And let me give you a couple of definitions here before I explain it. I just want to make sure we're all on the same page. You've got a departing property. That's where you live right now. And that's the property you're looking to sell if you find something better to move into. And you've got an acquisition property. That's where you want to move to. So the transition loan looks at the value of your departing property. It looks at the value of the acquisition. Add those together. Now you've got a amount of collateral, the total collateral for the loan. You have to take and multiply that times the loan to value, the amount that we'll give a loan for, that Geneva will give a loan for. So let's just say that the loan amount that they're willing to do is 65%. So if you've got two properties, each worth $1 million, you've got $2 million worth of collateral. Now you've got the total value. You take that times 65%. So that's going to be $1.3 million. And say you owe $250,000 on your departing property. That's what your mortgage is down to on your departing property, $250,000. So if you remember, I just said that you've got 1.3 million is what you're able to 1.3 million is what you're able to borrow. You're going to take off the 200,000. Now you can use 1.1 million to go and buy the acquisition. But it's only $1 million, Ron. Yeah, you got the money for closing costs and potentially even setting it up where you prepay your interest for 3 months so that the interest, so you don't have any payment on either property for 3 months. That gives you an opportunity to have your agent, a great agent. We're going to talk about how to find a great agent. In most instances, the easy way is give me a call at 800-306-1990, 800-306-1990. We'll put you in touch. But the bottom line there is it's a way of you buying a piece of property and not having to worry about your departing. Now, one of the other benefits, a side benefit, is it might give you a little extra time for moving, right? I mean, you got what is it now? If you have to have the money from your departing property for the acquisition, you don't have any time. Now, we did put together a flyer for this, rsrlinks.com/transition, rsrlinks.com/transition. And you can actually get a flyer and see exactly how it works. It gives you the example scenario down along the bottom there on the bottom of the sheet. And it gives you a little bit more in the explanations. Does it cost money? Yes, of course it does. There are no free lunches, no matter what anybody wants to tell you. So it does cost money. You do have some points and fees because it is a new loan. But you're getting the property you want. Now, let me ask you this. If you're able to get, or your agent was able to get you at 1, 2, 3, 5% discount on the purchase property because you're a cash buyer, Do you think that'll offset most of your costs or all of your costs? Probably. So your loan, it makes your acquisition a stronger offer because you've basically got cash. You can close in 10 to 12 days if everything is, all the cooperation is there. So the bottom line is the transition loan is a great alternative for a lot of people. rsrlinks.com/transition. You can find out about that program. Again, it's from our friends at Geneva Financial, Borrow Smart segment, brought to you by rsrhomeselect.com, rsrhomeselect.com.